Okay, everybody, here we go. It's me, Gregory Mannarino. It is Wednesday, April 26th, 2023, and it's just beautiful. It's lovely. Let's start off with this. A phenomenon is occurring that you and I knew was going to happen. What am I talking about? It appears that these smaller regional banks, well, their assets are going on sale. And I'm going to give you one guess as to who's going to buy these assets. People, I'm laughing, but I shouldn't be laughing. The consolidation of the banking system is in full swing, and you're not allowed to know that's going on here. Again, this is a huge part of the new system that is going to be rolled out. They need fewer players involved. They need to pretty much extinguish the smaller banks and to somehow obviously make the too big to fails even bigger than they are. So I can promise you right now that the CEOs of the mega banks, they are spraying their shorts all over the place. They're going to be getting assets for next to nothing here. They already got the deposits that were being put in these smaller institutions. People, you and me, we have been so far ahead of the curve on this. Again, from at least 8 months ago, going on like 9 months ago, we discussed the issues with the banking sector. No deposits, no loans, no deals. Well, the big banks, they sure as heck got the deposits from the smaller institutions, and now they're absorbing their assets here. And they're going to get these things for pennies on the dollar. But what else would you expect? What else would you expect? It's going exactly as you and I would have expected it to go here. But watching it unfold after we speak about it is pretty amazing here. So that's a big thing that's going on here right now. Here's something else I think that's kind of important here. So with regard to these smaller banks and the issues that they're facing and we're facing here and still are facing. So Silicon Valley Bank, Powell, vomitous mess, Fed chairman, he admitted that from November, the Federal Reserve realized or knew that there was a problem with the smaller and regional institutions, SVB Bank, in particular. However, it has now come to light that banking regulators apparently knew about the issues before that, but yet no action was taken. None. Well, why? Of course, we know the answer to that. They needed this event to occur, allowed it to unfold, as to consolidate the system, getting ready for the rollout of the new, completely digital, fiat monetary system that's going to be rolled out here. And you know how you can rest assured that this is going to happen? Because you got more freaks coming, more politicians saying, we need a gold standard. We need to go back to a gold standard. That's how you know it's not going to happen. They're just trying to buy votes, as they always do. Now, we understand something else is going on here, and let's pay attention to that. So the Joe Biden-Stein re-election campaign is in full swing, and the mega donors are already pumping who knows how much cash into this man's campaign. Okay, so there's another phenomenon that you need to start to pay attention to if you're not already. And that happens to be the economic news. Again, Joe Biden's campaign slogan, "Let's finish the job," sounds interesting to me. So the propaganda, as you and I already expected, is going to get even more out of control. How strong the economy is, how we're adding jobs, and everything is all fake, of course. But again, it's to twist the minds of people, and that's what this is exactly designed to do here. So just I know you get it already if you follow this blog, but I can promise you, you haven't heard a damn thing yet. So be very leery. In fact, I wrote this down. Be very leery about economic news as the Joe Biden-Stein mummy man election campaign is in full swing. As if you have a choice. As if you have any choice whatsoever as to who's going to be put behind the Resolute desk. Understand, they've already picked the next several presidents. You have no voice. We have no representation. Zero. Once you get hip to that, everything is going to be a lot more clear to you. So, let's talk about some other things that are going on here. The 10-year yield or the debt market, again, we had this jump higher in the 10-year yield. Now all of a sudden it's coming back down, way down. Now it's coming back up again. So, this clearly instability here. Okay, what happened? We had the 10-year yield last week about 10 points higher than it is right now. So look, this wavering around in that debt market, that's just another sign to you and I, like we don't know this already, of instability in the debt market, and it's a time bomb. It's going to go off. When? Who knows? Who freaking honestly really cares? Honestly, we're just preparing ourselves for what's coming here. Bidding against the debt, becoming our own central bank, being in this market if you are so inclined. There's not a guy on the planet making it easier for you to take advantage of all these things, at least in my view. So this morning, stock futures are slightly higher, pointing towards a higher open after yesterday's pretty significant sell-off here. You got, again, bond yields dropping somewhat here from yesterday. You got the relative strength of the dollar pretty much falling through the floor. The MMRI came down, sitting at 214. People, we still remain in a high risk zone. Don't lose sight of that, okay? The market is teetering on a knife's edge, and anything can really set this off. But with the effort going on right now, with, in this case, the Federal Reserve buying it all. Who's buying all the debt? How does the Fed keep rates where they are? They can't just say it. It doesn't happen by decree. They have to get into the market and make it happen, and you know that. And what else do you know? All right. We have spoken about as long as they maintain the illusion of stability, this market will go higher. Absolutely. Did Greg Mannarino just go short this market just yesterday and pretty much nailed that to the wall? Yeah, I did do that. And if you do recall, on the 14th of this month, I put out in my free newsletter, do not short this market. That was on the 14th. All right. It's all about timing. Timing. A lot of you have written to me, hey, Greg, you said on the 14th not to short the market. Yeah. Fast forward to now, okay? I've been explaining to people for at least 2 weeks that this market looks toppy. Market looks toppy. Market looks toppy. It does look toppy to me. I'm not saying this is an absolute top. I believe we could see a drop here. We started to see it yesterday. It's going to bounce around. Again, I already explained to you. I went short yesterday. I told you exactly how I did it. I posted my exact position in my free newsletter, link in the description of this video. It's going to waver around on the way down here. It's not going to go straight down. So, look, I think if you're one of my lions, you get it. You know how this works here. But look, what we have here, in my opinion, is an opportunity to not be fleeced and an opportunity to take advantage of this thing that we are in here. So anyway, on the back of whatever's going on here right now, we got stock futures pointing towards a higher open. Relative strength of the dollar falling through the freaking floor. 10-year yield bouncing around, but somewhat stable here. Bitcoin catching a bit again, up almost at near 30,000 again. Gold and silver catching a bit. Crude oil under a little bit of pressure here. You know my take on energy, people. You know my take on commodities here. I can't say this another way to you. You need exposure here. Easiest way to do it is to own the physical things, gold, especially silver here. But, if you are so inclined, getting some exposure via an exchange-traded fund to a wide, large basket of commodities it's a no-brainer. It's a no-brainer in my opinion. And I have posted at least 3 newsletters covering this, several exchange-traded funds on multiple occasions that you should be looking at here, people. I got your back. You know I got your back. Anyway, so that, my lovely friends, is where we stand. So I want to hear from you. What do you think about this? Again, when this whole thing with the banks got started here with the smaller regional banks, I said, why is it that the regulators are not being held to account? Now we find out that from at least October of last year, these regulators knew there was a problem, but did nothing. The Federal Reserve knew from at least November, according to Powell out of his own freaking pie hole. Well, he knew it too. No action was taken. Now all of a sudden, their assets are going on sale. It's a fire sale. And these Wall Street bank CEOs, they are loving life right now. Loving life. Anyway, make this stuff up. Make any of it up. People, this guy loves you a lot. Please comment. Please. Those thumbs up, I'm telling you again, very valuable. Give this video a thumbs up. More people will see it. That's how the algorithm works. If you don't want people to see it, and you don't think this is worthwhile, then I guess don't do it. But I think we're on top of these things, you and I, people. And we can't be beaten. We know exactly what we're doing, and we know why we're doing it. You understand? I will see all of you later, 1:05 p.m. Pacific Standard Time for my live stream. Please have your questions ready for me, and we will interact, because that's what it's all about. I don't do the live stream just because I think it's fun. It is. But I do it so we can interact in real time. All right? I'll see you later.